everyone, and welcome to TradersArmy.com's Stock of the Week. What we're going to do today is we're going to use the TradeHawk platform and identify a trade that we think makes a little bit of sense if you understand how to do it from an options perspective. Now, what's really unique about this is that this setup is designed for you to be able to take advantage of some option knowledge that you may have. And if you want to learn more about options, go to TradersArmy.com. We're always here to help you. Today, we're going to be talking about a stock that has been, one of the darlings of the markets for a long time, and it's really taken a beating in the last few weeks, last few months, frankly, as the rest of tech has also taken a beating. We're talking about NVIDIA. And NVIDIA, the semiconductor, microchip manufacturing, focus a lot on the gaming world. It's got a lot of people out there saying now's the time to buy. It's come down to a good price. Now's the time to buy. But do the charts tell us that? Do the charts tell us that? I don't know that they do. So let's go ahead and dive in and take a look at the charts. Okay, so we're taking a look here at NVIDIA. And this NVIDIA stock, what we're looking at here is a weekly chart. So each candlestick represents a week's worth of time. And the thing I wanted to do very quickly is just take a look at the weekly candlestick pattern that we put forward. If you look at last week's candlestick pattern, this is a very strong reversal candlestick pattern, a little bit of a spinning top doji here. After the week before was a pretty strong week closing on the highs. Now, what this shows is that yes, we've already got two consecutive lower swing highs as well as two consecutive lower swing lows. But also, if I go out a little bit further, I think it's fair to see that when we're just looking at a price area, this area right in here, this 158.27 area, historically was a resistance line. Old resistance often acts as new support, and I think that could be a very realistic place for the stock to get. To get back down to this 160 region is not something that I think is unattainable or something that's very far away. Now, let me get rid of this support line. If I take a look and I compare this relative to the spiders, one of the things that I really want to pay attention to, and let me actually do this on the daily time period. So looking here on the daily chart, and relative to the spiders, what we can see is that NVIDIA had a very big run up relative to the SPY, and then has had a really strong move down relative to the SPY. So it's been a lot more volatile overall. But in looking at, kind of what we have going forward, we can see that we put in, not only did we have a bearish, a reversal candlestick pattern on the weekly chart, but we have a bit of a bearish harami on the daily time period. And so the combination of the weekly reversal as well as this bearish harami tells me that there's a good chance we could continue to move a bit lower. Now, in looking at this, I think that where it would stand right now is that I would look for a short at some point if price gets below 182. Now, we're going to set the trade up today following the parameters based upon current price, but certainly the parameters may change just slightly when price gets down into this region. So this is my current setup, is to look to get short below here. Now, where's my stop have to go? Well, in this case, my stop I would probably want to put a stop above this candle's high. So you've got a stop at about 196, at that area of resistance. You've got a support line there about 182 as a place to get short if we get below. Basically, we're taking Thursday's candlestick price action as our range for this overall position. Now, where do I think a realistic target would be? I think that a very realistic target would be somewhere certainly down in this region here, right around 160. I think 160 is a very realistic target, and in that case, you're essentially having a fairly limited amount of risk for a decent reward. Now, I would say that would be a first target. I think you could have a secondary target significantly lower. Going back and taking a look at the weekly chart, your secondary target, I think, is very realistic, is down at about 130. So I think you've got a pretty decent potential in this opportunity. Now, looking at this back on the daily chart, one of the things that I want to pay specific attention to is where are my where does my volatility telling me, right? So if I take a look at my current volatility, and I'm going to use my volatility channel here. And when I look at my volatility channel, one of the things I do like is that this recent move up that we've had has reduced the volatility. Now, for those of you that trade options, you know that if we're in the red section, the upper 20% of the volatility's 1 year range, we're looking to be options sellers. In the middle area, we're looking to be options buyers, and in the central area, we're looking to do spreads. So I think this is now setting up for a potential spread opportunity. In this case, probably a bear put spread. So let's go take a look at the options trade that makes the most sense. When I look at the options trade, I'm going to add a new position. And this position is going to be the NVDA bear put. And once again, if you don't know much about options positions, go to tradersarmy.com. We have a tremendous amount of tutorials there for you to take a look at to understand a little bit more about options positions. Now, I'm going to add my options trade. And I think that this trade may take a little bit of time. So my months up here are, the top here shows my expiration date. So June 10th, June 17th, June 24th. As I move further over, we see July 1st. I'm actually going to go to the July 8th, July 15th. I'm going to go to the August monthly expiration. And when I go to the reason I want to go to the August monthly expiration right here is because I want to give myself enough time to be right, and I don't want to be overly impacted by time decay because this is a debit trade, which is theta negative. So I will be theta negative in this position. Going out a little bit of time makes it a little bit more palatable on how time is going to impact it. Now, one of the things that's important when I look at these positions is I've got a couple of rules. And the first rule is that I want to have a net delta of about 0.25. So if I click on this delta tab, I can see the delta for each one. Now I concern myself right now with the put positions. The put positions are the ones that I'm going to pay the most attention to. And I'm going to go right to about the at the money put, the 160 put, and I'm going to sell the 160 put. And when I sell the 160 put, I'm going to get a delta here of about 23 on that 160 put. Now that's a negative delta, right? Because I'm selling. It's a negative of a negative delta, so 23. So that means that I would need about a 48 delta on the other side to give me that net delta of 25, because 48 minus 23 would give me my 25. So as I go down I need to buy my option for protection, and I see here that I've got a 0.4739 at the 190 put. So this means that I'm doing the 190 by 160 bear put spread. Now, this is a $30 spread. What is my cost on this $30 spread? Well, when I buy the 190 put, that's going to cost me $19.45. When I sell the 190 put, it's going to bring in $7.75. So my net debit on this trade is going to be around $12, right? $11.50 in that range, which is clearly less than 15. Now, why is 15 relevant? Because it's a $30 spread. My rule is that when I do this, I want my debit to be no more than 50% of the spread amount. So in this case, I've got a $30 spread with around a what is it, $11.70 delta, debit. So it's a fairly inexpensive debit. Now, when I look at the P&L on this position, what it shows me is this up here is my risk graph. And I'm going to look really quickly at the table. And the table is just meant to show me on August 19th, what is my P&L, right? What is my P&L? So anything below, when price goes below 160, my maximum profit is $1,830 for anything below 160. What's my maximum loss? Well, my maximum loss is $1,170, which is my debit, no matter how high the stock goes. So we're playing kind of in between that area, right? We can see price over here on the left, right? Price over here on the left, my P&L over here on the right. I'm looking at August 19th. Now, this is showing me the date of June 5th. Obviously, that is the date that I'm looking at this position, and certainly this trade would look different based upon the day that you are identifying this opportunity. Looking at this on the actual chart, one of the things that I can see is that this yellow line represents my P&L on expiration. We see that our maximum loss occurs when we get above 190. Our maximum profit occurs when we get below 160. And currently, as of today, on our expiration date, our break even is going to be 178. Now, I'm going to hit play up here, and this is going to show my break even date each individual day. And what we can see, let me just pause it right here, is that my break even date on July 3rd is 185, right? And if I go day by day, July 4th, July 5th, July 6th, July 7th, we can see that each day my break even date gets lower and lower and lower. And that's essentially the effect of theta on the position. So our initial break even price is going to be right here at about 188.13. Over time, our break-even price is going to shift further to the left, as we can see right in this area here that my date is continuing to move up until expiration date. Now, with a price with a price target of 160, what are we looking like at about halfway through expiration? I kind of like to look at about halfway through expiration to see what the value would be. So let's stop this right at about 725. So at 725, we're looking at a risk, we're looking at a profit on this position of right around $979 at 160.03. Now, that would be our profit on that position. What about our risk? Well, our risk would be that it goes above 190. If you remember, our stop loss was at 190. So we're looking at a profit of around $1,000. What's our risk if we go to 190? Well, at 190, our risk looks like it's about $284. So this trade is about a $284 exposure to $1,000 profit potential with a 160 and 190 price target. Now, that's as of July the 25th. So that certainly qualifies greater than a 2-to-1 reward to risk, which is certainly what we look for, and a pretty good setup. So all in all, I think you could do a heck of a lot worse on trades than NVIDIA, but certainly you've got to understand the risks and characteristics of options before taking any look at it. If you guys have any questions, as always, send us an email, support@tradersarmy.com, and I will talk to you soon. See ya.